we started with the pharmaceutical space, Deepan. Let's discuss more of that in detail with Vishal Manchanda, who's joining in. Vishal, Deepan said that he was fairly bullish on this space until this Trump-related uncertainty came by. So, I wanted your thoughts on, how much it would impact and which would be the stocks that would be most impacted by these tariffs. Or do you think that maybe, it's okay, tariffs or not, our manufacturing costs are a lot lower than international manufacturing?
So we've been discussing this for quite a while, the Trump tariffs. So I think the way we want to think it seems like it'll be difficult for the US to impose tariffs on Indian pharma because it's against their best interest. It'll be inflationary because there is no room for Indian companies to kind of absorb the tariffs and retain the prices that they sell the drugs at. And if US wants to manufacture these drugs in-house, it will be I think at least 2 times costlier, if not less. So at least 2 times costlier for them to manufacture the drugs in-house. And then you can't manufacture them in-house practically because you don't have the ecosystem to do that.
Okay.
So if in case if there are differential tariffs, like if they impose tariff on India and they don't impose tariffs on other countries, even then I would believe there are no capacities available, USFDA approved plants available to meet to the kind of supply that India caters to. So okay. I don't think there's a remote chance here for Indian companies to be hit. But let's see, wait and watch how things pan out.
Uncertainty on what Mr. Trump will do today, tomorrow, or day after. But for the time being, you're saying that's not your, that's not the case. You're factoring in that Indian companies get hit because of these tariffs. Got that. Good to see you, Vishal. After a while, let's focus on a couple of other factors. We saw Sun Pharma. They went ahead and they did some inorganic growth. And this will add a good size, right? It's pretty interesting acquisition. I think most on the street were positive on it. How do you see this fit in? And what is the target price you have on Sun Pharma?
So I think this the drug that they got through the acquisition is called cosibelimab, which is a PD-L1 inhibitor. So the market opportunity that this class of drugs PD-L1s represent is a very large market opportunity, and specifically for this indication, Sun Pharma has got an existing market presence. The data so far is convincing, and they already have a USFDA approval. So we don't face any regulatory risk. So based on the prevalence data that we have, so it's for a skin cancer indication. I think based on the prevalence data for the indication that they've got approval for, it should at least be a $250 million, assuming only 10% share. There are 2 other players who are competing for market share there. So I think looks like it can be very interesting. Bare minimum $250 million is what I would think, and it can exceed $500 million in peak sales. And they paid about $350 million upfront, plus there are contingent value rights.
Okay, all right. And I think on Sun Pharma, you have a buy rating with a target price of around 2,200 rupees, right?
Yes, yes.
All right. The other one I wanted to focus on Jubilant Pharmova. You have been very, very confident that the management out there is guiding that the revenues could potentially double. They've also been talking about margins moving, I think, from high teens to early 20% odd. Your view on the stock?
So I think there's just one overhang there. Apart from that overhang, if I would look at the story, it's a 15 to 20% compounding story at the EBITDA level, and the net earnings should compound faster than the EBITDA growth. So the only overhang that I see in the near term is the tariffs, because US intends to put tariffs on Canada. So these tariffs were imposed and they were kind of again taken back, and so there's a lot of to and fro happening here. For the moment, the products that Jubilant Pharmova manufactures in Canada and sells in the US, they are all exempted right now, but you don't know whether they come under the tariffs again. So if we exclude that, they're placed in a very good macro environment. So they have exposure to sterile contract manufacturing. We know that the sterile contract manufacturing space is facing supply issues, and they have a presence in the US. So that is where most of the demand is coming to. So sterile manufacturing is where innovators don't want to rely on countries outside the US. They want to they want to outsource more to the US manufacturing facilities, and Jubilant is positioned there. Jubilant is also positioned in a market radio pharmaceutical space, which until a few years back was not growing. But if I look at the growth opportunity there, that's going to be like 10 to 15% compounding story, and they're well placed in that market among the key players in that space. So
Just
I
a
think
quick point.
good play.
Vishal, just a quick point on semaglutide and GLP-1, because, you know, globally, it seems like the fad that there was is now slowing down or plateauing, if at all, the growth rates out there. If you could give us a sense on how that is and what that would mean in terms of an opportunity for Indian players.
So I think semaglutide going generics is a separate opportunity, while the overall GLP-1 market is more. So globally, the GLP-1 market is driven by innovators, while in India and emerging markets, we'll see the market being driven by semaglutide generics. So if I look at the picture globally, I think what probably is happening is the patients who take this drug for obesity are not taking it for too long. They tend to kind of get out of the treatment maybe 1 year, 2 years, or 3 years down the line. So currently, if you look at the adherence rate, I think only about 20-25% patient would stick to the treatment 2 years down the line. So there are new patients coming in, the older patients are dropping out of the treatment as far as obesity is concerned. And that's where large part of the expectations are also placed. While coming back to the India opportunity, this is going to be more driven because India is currently not actually so we don't have adoption of GLP-1s because of the pricing issues. But once generics come in, pricing will come down and we'll see some adoption. And even if we kind of see 3 or 4% adoption, this can be $1 billion market in India.
All right, Vishal, got that. Thank you very much for the perspective. It's been quite helpful. Thank you for joining us today.